Retracement is always part of the trend, and reversal is the only way when trend will change. Okay? From retracement, there might be a reversal. But if the trend is strong, we usually expect at least 2 or 3 legs in a trend direction before price actually can reverse. This is the first leg, this is the second leg, this is the third leg. Okay? Now, we will start with bullish reversal patterns, and those are patterns which I find important in practical naked trading concept. First pattern is called bullish 3 inside up. And for all reversal patterns, there is a common characteristic that the market is first in a downtrend, and then it hits support and reverse. Okay, that is why we call it bullish reversal patterns. So again, I'm saying for all of you who joined up a little bit later, this concept of practical naked trading will help you no matter which kind of trader you are. Indicator based, harmonic trader, price action. This is the core of price action. Bullish 3 inside up is a bullish reversal pattern. We have usually 3 candles in configuration. First candle is bearish. So for all bullish reversal patterns, first candle will usually be bearish candle. Then the second candle is bullish, contained within the body of the candle, and the third candle has a higher close price than a second candle. Okay, so this is bullish reversal pattern, and when price hits important support zone or demand zone, call it however you want, the chances are that the price will reverse. Okay, this is one of the examples of bullish 3 inside up, and definite acknowledgement of this price pattern, candlestick pattern, is at this point when you see when this high was broken, the price continued in long direction. One of most common bullish patterns is called piercing line, and this is pretty much accurate pattern, and usually it's comprised of 2 candles. We have only 2 candles in its configuration. First candle is a black momentum candle, so this is black momentum candle, and the second candlestick opens up, but look where it opens, below the first candle, goes slightly down. Okay, so this is important, it goes slightly down, okay, but it closes more than halfway into the body of the first candle. So it doesn't eat it completely. It doesn't eat. This is engulfing candle. When you see this pattern, this is very common pattern in Forex market, you will know that this is piercing line. Okay, so this is piercing line pattern. And usually when price gets a piercing line close to support, it will jump up and make a good retracement to next level of resistance. These are some examples. This is piercing line. Look at reaction. This is also piercing line. So the bodies are important here. The bodies, look, piercing line, and of course jump to the upside. Hammer is very, I call it rejection candles. So in my analysis, all hammers, pins, basically candles which have a pin below or above it, I call it pin. Pin is equal to rejection candle, because candles which have rejections, these kind of candles which show rejections at important zones, are definite confirmation for a price that it will go up to some extent. So a hammer is characterized definitely by a downtrend, and the thing is, when downtrend hits important support, okay, hammer might show because that shows us so-called now momentum or now moment buyers. Okay, now moment buyers. That means that buyers are kicking in and they want to at least retrace the price to some extent, maybe to subsequently sell it again. Hammers are used for entries in intraday trading, but also in scalping methods, because they are a good indication that the trend is undergoing a possible retracement. Okay, when a hammer shows up into a demand or into, how I call it, POC or support, the price will usually jump up. Okay, so this is one of the examples where we see rejection pins, and this is representation on dollar CAD. I did this yesterday, and if you check the price now, the price went up. So look at this now, just pay attention to these wicks here, and this part here is important. So this is breakout, previous breakout, so this is a history of buyers here. Now if you go to the left on your chart, you can also see that this price level was historically good for buyers. Now we trade at this point. You see a lot of rejection candles, call it hammers. This is a hammer. This is a sort also of a hammer. But in its core, these are all rejection candles. So when you see that now moment buyers are kicking in, aligned with historical buyers, which is also previous breakout level, you can assume that the price will indeed start to go upside. And for this trade, I took some 60 pips. This is definitely price action in its core. So you just need to confirm a couple of price action confluence points and you can place your trade. It's not that hard, but I know that price action is always a little bit harder than simple cross of RSI. Okay, but this is more professional, and this is how big banks and hedge traders, if they do manual trading, they do it like this. Of course, many banks and most of big money is trading by using high frequency trading robots or different algorithms which are automated, but manual trading concept, for me, professional manual trading concept is pure price action. Okay? Yes, my definite time frame of choice, which you will see later, is 1 hour time frame, because I trade intraday. And if you followed my analysis on FXStreet, you know that all of my trades are meant basically for intraday perspective, and we can basically use that for today and tomorrow. Okay, so pay attention to this. Okay, I will answer to your questions later, just when I go with these slides. When I go through with these slides, I will answer your question, guys. I will answer your questions about cable, and don't worry. So this was a definite choice for me, that the price has found basically at this point now moment buyers, and it will go to the upside.